Yes, but it's time for CNBC-TV18's new offering, the macro signal, which the aim is to isolate the macro forces that matter for the day and explain how it translates into market moves. And Ritu, as always, is going to break this down for us. And today's focus is on the first advance estimates of the GDP for FY26, Ritu.
Yes, Hormaz, that is very much the big focus area for today because the Ministry of Statistics is going to release this estimate later this evening. And with that, we'll get the first official snapshot of just how fast the Indian economy grew in FY26. Now, keep in mind, this is still an estimate at best. So it's based on partial data and all kinds of extrapolations that are made. So it is bound to be revised later. And also the fact that, all the assumptions will have to be changed once we shift to this revised series with the 2022-23 as the base year. So the number matters. It is subject to revisions. So, we still have to look at it because it forms the base of all the budget math. Now, let's look at where the expectations are. The CNBC-TV18 Outlook poll we presented, which Lata did, pegs the FY26 real GDP growth at 7.5% and the nominal GDP growth a tad lower. 8.3% is the expectation. Now, RBI's own projection is also slightly lower than 7.5% at about 7.3% for FY26 in real terms. Now, so far, we've already got an average growth of 8% for the year, so a 7% plus number does not look unreal. Now, last year's budget had pegged the nominal GDP growth for FY26 at a little over 10%, but the actual FY25 GDP size was also larger than what the budget had estimated. So overall, these changes should not affect the budget math too much. Now, why is this number important? Because this is the starting point for all of the budget calculations that will happen. You take this advance estimate for FY26 GDP, then the government is going to assume a certain growth rate and come up with the estimates for FY27 and then anchor all the budget math around that. Now, these assumed FY27 numbers will, with the FY26 base, will drive all your tax buoyancy assumptions, the fiscal deficit projections, and the denominator that will be used to calculate the deficit ratios as well. So even small changes in this assumption can materially impact things like government borrowing, your capital expenditure allocations, etc. And this is also where nominal GDP becomes the more important hidden driver because the budget math is not done on the real GDP numbers. It is linked to the nominal GDP, and nominal GDP growth for FY26 will be the starting point for the revenue projections for FY27 and determine the fiscal space that is available. Now, a lower growth will mean weaker revenue buoyancy and tighter budget math going into next year, and a stronger number, on the other hand, will give us more fiscal headroom and more flexibility on government spending and the deficit targets as well. So that's the reason you should keep this number on your radar for today.